Hey everybody, I am Patricia Spangler with Pastermack Real Estate. I'm speaking to Allison Tremper from the mortgage firm, and we're going to be talking about preparing for a mortgage today. So thanks so much for being willing to talk to me.
Thanks, Patty. Happy to be here.
Okay, so what do I need to think about, or my clients, what do they need to think about if they're going to be getting a mortgage maybe next year? Like, what are the do's and don'ts now?
Great question. One of the most important things is to pick up the phone and talk to a mortgage loan originator to figure out your scenario. No two scenarios are ever going to be the same, but there are some general basic do's and don'ts. When we're looking at your income, your assets, and your credit, when we're looking at what your eligibility is for qualifying, especially when it comes to your job, we're looking for a 2-year history. So you definitely want to be employed for 2 years. For assets, we want to make sure that you've got funds for the down payment and closing costs.
Okay.
So you do need to have some money set aside, preferably in a savings account or a checking account, some sort of documentation, documentable funds. Cash is a no-no. So if you have cash stashed at your house, you definitely want to put that into a bank account so that we can show the
Paper trail.
paper trail, exactly.
Okay. What if somebody's on commission and it's not a consistent, paycheck that comes every single week?
Excellent question. When it comes to different types of employment, whether you're hourly, salary, commission, tips, every single type of employment has a different guideline.
Okay.
Depends on how long you've been there, what the frequency of payments are. So
Do you have to keep track of that stuff, tips and everything, right?
absolutely.
Okay.
We have to see, depending on the type of employment, what the history of receipt is.
Okay.
So again, contact your local lender so that we can discuss your specific scenario.
Okay.
Other do's and don'ts. You want to be mindful. Don't rack up a lot of debt. Don't go and
Obvious.
buy. You don't want to go buy a new car, open up a whole bunch of credit cards. You just want to be mindful because a debt to income ratio is the driving factor behind your eligibility. So the more debt you have, the less house you're going to be able to buy.
And definitely don't go buy furniture for your new house right before closing.
Absolutely.
No big spending, right?
Absolutely. No
Okay.
big spending, no large deposits either. If you had a loan from a family member and they've repaid you,
All that stuff can either
it can
completely
make or break a
stop
loan.
the closing or delay it.
Absolutely.
Okay. Well, each situation is going to be completely unique, so we just encourage you to reach out to us. I'm Patricia Spangler with Pastermack Real Estate, your Space Coast Realtor,
And I'm Allison Tremper with the mortgage firm, your local mortgage loan originator.
okay, and just refer to my website, patriciaspangler.com, for our contact information. Have a great day.
Thanks.